Home value has risen by some 13.4%, slightly above the 11% prediction of Zillow and Realtor.com. However, inventory is healthy, and newly constructed homes have a national median of $402,400. We could have a better housing market if existing homes could catch up. For today's video, we are detailing the one thing that could put the market back on track. It is the housing market explained. What can cause a housing market to rise 2022? Let us get started. We are already starting to see signs that the market is moderating. This summer, it is likely that fewer buyers will be able to afford a home because of rising interest rates and increasing home prices. While unaffordable housing isn't a good thing, it does mean that buyers still in the market may have more time to find the perfect home. This is a message from Dr. Jessica Lautz, in charge of demographics and behavioral insights for the National Association of Realtors. The tight inventory and fewer buyers will help the market moderate, or at least, so Dr. Lautz predicts, and some of her colleagues agree. Finding the best home just got easier with the median sales price of new homes at around $402,400. This shows the ease in the market and a potential further price decline soon. We will tell you more shortly. In 2021, when CNN was closing the year on the housing market bubble, they shared some tips on what the housing market 2022 could look like. For instance, the economists at Zillow and Realtor.com said that competition would not slow down this year. They were confident that tight supply, high mortgage rates, and elevated demand would make it a seller's market. Again, housing market price predictions by the economists placed the home value at 11% higher as compared to 23% from 2021. Looking at the current housing market price during inflation, the 11% climb is not as substantial as last year. We can blame COVID-19 labor shortages and supply chain bottlenecks for the lower inventories in 2021. Recently, the median price of a home reached $416,000 in June. Since then, we have encountered a slowdown in price growth. The existing homes are up by 13.4%, a little higher than the CNN prediction, but still low if compared to 2021. Moreover, the U.S. Census Bureau and the Department of Housing and Urban Development say newly constructed buildings are priced lower. The median price of a newly constructed house was $402,400 in June, from $444,500 in May. Employees at various mortgage offices were quite pleased with the decline. In fact, Robert Frick, corporate economist at Navy Federal Credit Union, implied that we might finally see a break in annual increases that have priced millions of Americans out of the housing market if the streak continues. Sadly, newly constructed homes represent 10% of the market, while existing homes make up the other 90%, so we are still unclear. Unfortunately, this is when most millennials and the oldest Gen Zs are buying homes. Online job opportunities and investments by older relatives are paying off, yet they might not get the house of their dreams if this one thing does not stabilize. We will share what it is with you shortly. Therefore, the market continues to have more properties sitting idly for a while. A record 14 days after a listing is a current mark that homeowners have to endure. This can go to the advantage of homebuyers who do deeper homework, as they might be able to negotiate better prices and find the homes of their dreams. Taking the rush of making offers as soon as one finds a home might put the market back on track, as there is a current 20% decline in sales nationwide. Redfin confirms that roughly 15% of people who signed home contracts up to June backed out. The number is as high as what the market saw in April 2020 at the height of the pandemic. Nevertheless, experts expect that the mortgage rates have reached the highest rates. They anticipate that mortgages will settle at 6% at the end of the year and stay there. Once that stability starts, we will be assured of a housing market rise in 2022. For example, we have seen better inventory levels, and millennials and Gen Zs are ready to purchase their dream homes, most of them with inheritance money. The rest, who could not afford homes, can now due to work-from-home culture, government support, and the rise of cryptocurrency. Further, the prices are becoming more reasonable, and the U.S. top 20 most expensive cities are all averaging lower prices than in 2021. We also have budding home sellers as people prepare their finances for the recession. Thus, the only thing standing between the market and the people is the Federal Reserve and its interest rate spikes. The uncertainty of the mortgage rates is what is holding the market back. We hope this puts the future of the U.S. housing market in retrospect. Once mortgage prices are stable, the market will moderate itself back to normalcy. In the meantime, we have news for homebuyers. Watch our previous video, Housing Market Price on the Rise During Recession. Here is what to do.